Hey, what's up guys, Stock Catcher here. In this video, I'm going to be talking about a very important concept, dilution, as well as the bearish side of trading. A lot of traders, especially newer traders who have been only trading a few weeks or a few months, they don't know about the bearish angle, right? They're more permeable, which means that they're just thinking about the long side when a stock goes up. But there's a large portion of people that's short. They make a lot of money when a stock goes down. So it's very, very important to learn about this stuff, because if you don't, you could end up in a very bad situation, right? Because a lot of these stocks we're trading or invest or holding or swing trading, they're heavy dilution. These stocks keep making lower lows as well as just bleeding. They're like bags essentially, right? So the reason I'm making this video is because I want to help out a lot of people, because I don't want them to go through what I went through, right? When I started trading, this was a long time ago, many years ago, I didn't really know much about dilution or penny stocks being bad. When I heard about a stock, let's say XYZ, this is just a random letter, it's not a real company. Let's say XYZ said that they're gonna make a new electric vehicle that drives itself. I used to seriously believe that this company is gonna be life-changing, or it's gonna be like the next Tesla. And then I would, put money in. And then what do you know? Most of the time, these companies, they just dilute, reverse split. They just keep, dumping, in my opinion. And then it just ends up bleeding, right? And then I'll be holding these bags, and then I'll look up the next company that does the next big thing, get into that, and then again, that stock goes down. And then these just go on for a while, and then I ended up, losing a lot. And then once I learned about this dilution, once I learned about most small cap penny stocks are junk, they're just like trading vehicles where you just get in, get out within, a few seconds, few minutes, or like short-term swing trading, like within like days. That's when I seriously noticed a drastic change in my performance, and not just performance, but my mental state. Because when you're holding these bags, when you're holding these stocks that are just inevitably gonna go down for weeks or months, it really messes up your brain. Like, it makes you kind of depressed, in my opinion, as well as it also affects your trading performance. Think about it. If you're holding several stocks that are just constantly losing money every day, it's gonna mess up your clarity, and it could even affect your serious personal life, like family or friends. If you're holding a serious bag, you're down like say 5 figures or even 6 figures, right? Or even thousands. So this video is probably going to be my most important video other than risk management or psychology, right? Because this is something that you're going to see every day when you're participating in trading. Stock market, penny stock, small cap, doesn't matter. You're going to be seeing potential dilution. So I'm going to start the video by talking about the main SEC filing you have to know. And this is going to be kind of confusing for some people if you're newer to trading, so I recommend maybe write down or save the screenshot, right? So for 10Q, basically you can learn about outstanding share, which is really important. You must know outstanding share. You can look at warrant, convertible, cash position, or going concern warning. 10K is like 10Q, but yearly. You're talking about detailed financing table. You have to know you have to know the AK filing. You could look up immediate alert on dilution. You could look up new offering, warrant repricing, or potential reverse split, right? S3, this is probably my biggest one that I look for, which would be registration for future offering ATM program. S1 will be new share offering, details on toxic financing or dilution. 424B5 final prospectus for offering. Dilution is usually active at that time, right? As well as SC13G, 13D. This is one basically like, new and large investor. Often they show indication of shares being sold on the market. So if you see the picture right here, right? Mullen, Binney. So if you look at the chart, this stock just constantly was in a downtrend, just over and over and over, constant dilution factor. To the point where essentially, if you bought at the top, let's say many years ago. So the reason I made this video is that a lot of people are holding the stock thinking it's gonna bounce back, thinking that it's gonna have a miracle and it's gonna end up just pulling a 10x or multi-bagger move. But that's just honestly gambling, in my opinion. Yes, of course, anything could happen in the stock market, but if I did that when I started trading, where I hold these bags, I could 100% say without a doubt in my mind, I will not be here today. I would have quit the stock market because I lose everything, right? If I hold those bags of stocks where I was down a lot of money, because most of these companies, they went to, you know, they just kept going down for years. So like it didn't recover at all. So the only reason I'm here today and the only reason I'm still trading after many years is because I cut those bags, and then with the capital I had left, which is a small amount, I used that and I really focused on trading, building my way up, right? Instead of just praying and hoping that I'm gonna make my money back, right? So next thing you have to watch will be dilution sentences, or basically phrases. You have to know, for example, substantial doubt about our ability to continue. As you're growing concern, you gotta look up, we have entered into a securities purchase agreement, shares issuable upon conversion of promissory notes, warrants exercisable at discount, ATM offering or equity distribution agreement. So this is another example, AMC, where a lot of people who bought this stock, they think that the stock is gonna, you know, go to 100 or go to the moon. And this is the thing with a lot of traders, is that there's many psychological barriers, right? Where if someone says something bad about a stock, most of the time they're gonna get really defensive or really angry. And that's why I mainly don't post bearish posts at all on StockTwits or Twitter or even YouTube, is because I know how most traders act, right? When you say something bad about a company they have, it really, you know, pisses them off. So, but you know, the charts don't lie. If you look at AMC, what's been going on, it's just constant dilution type of action where the stock just keeps making lower lows, and a lot of people are really backed in this stock, right? So when you're talking about open dilution, you have to also talk about ATM offering, toxic financing. This is a tip for you. If you know Yahoo Finance, this is a resource I use every day. You could look up the shares outstanding, right? So if the outstanding shares is increasing, that's not a good thing. That's usually dilution. Because usually when you see outstanding shares and then let's say next month it goes up, let's say from 40 million to 50 million or even higher, that's really bad, in my opinion, right? And then if a stock has open S3, like S3 shelf or ATM offering, they could sell shares at any time without a new filing. This at the market offering. So this is stock CANF that I really don't like. This is a stock that actually made a move in the pre-market. I think it was like 2 weeks ago. Remember I said they had news, and then it ripped 25%. And of course, when it comes to any small cap or penny stock, you can definitely make money, obviously, right? But the thing is that you have to treat these like very dangerous. It's like playing with fire. So you have to get in, get out. And oftentimes I'll be getting in a stock, getting out within literal seconds or minutes, where I don't hold these for months or, you know, a long time, right? So if you look at this chart, this is exactly the type of action you're gonna see in a lot of small cap penny stocks over the coming months or years. It just happens. You know, if you look at how much it fall from the highs, it's just actually crazy. I see stocks down 95%, 99% even, and then some even go to like, they pretty much just delist, right? So last thing I have to talk about would be if you're talking about stock, you also have to look at the warrant as well as the convertible and also the 10Q. Remember I talked about the 10Q earlier, the 10Q as well as the 10K. So the biggest thing in my opinion, I think if you are newer to this, I highly recommend always check for S3, the shelf, as well as look at the potential past outstanding share history. And everything I say in my videos, you could do this for free. A lot of people, they sell services or, you know, programs, you charge a lot of money. But most of I think all this stuff you could learn for free. You could go Yahoo Finance is the one I use Yahoo Finance, use FinViz, use these free resources, and you could seriously learn a lot. I mean, look up a lot of valuable statistics or information, right? So this is MLGO. This is another stock where a lot of times these Chinese, I believe this is a China company, where they end up doing this type of action where it just constantly drops to the point where it's like 95% down. And you see recently a lot of Chinese stocks rip in face, but at the same time, these Chinese stocks drop a lot. These are the biggest droppers, liquidation type of events. So you have to be very careful. So that's pretty much for the video. You know, I just want to end the video by saying that this video is just to help people out. You know, I know that there's going to be a few people watching this video thinking, you know, I'm just a short or you know, I'm like a bear. But if you 100% keep thinking like perma long or perma bull, like, you know, always on hope, you're gonna end up in a situation possibly where, you know, you could lose everything in the coming months and years. And the reason I'm making this video also is because I said in my other video, right, small caps are gonna get really hot in the coming months. Winter stands to rally, and a lot of people, newer traders, are gonna get FOMO. They're gonna buy at the top or get emotion, and then they're gonna get bagged really badly, and then hold it for a long period of time until you lose like 80% of the value, right? So I just want to help people not experience that, right? So again, everything I say is not financial advice. Ultimately, people could do what they want with their money. It doesn't really affect me, but I'm just trying to help people out, right? So Stock Catcher signing out. I'm gonna be making a lot more educational videos, so I recommend you subscribe. Have a great night, everybody.